And for more on the markets and how they're moving this morning, we were joined by Ted Oakley, the managing partner and founder of Oxbow Advisors. Ted, really great to have you on this morning. Wondering your reaction to these unemployment numbers that we got. Better than expected, but of course, as Kristen and I were just discussing, there are changes in the methodology in terms of how these numbers were reported.
You know, Jill, what happens is, it's one of those where I don't know the exact adjustments they made for the pandemic, but no matter what, 881,000 is a big number. I know we try to use percentages a lot and it's improving, but we still have a lot of people unemployed. And I think that's the biggest problem right now with the economy.
The U.S. debt, just switching gears here, set to exceed the size of the economy next year. That has not happened since World War II. I want to take a live look right now at the country's national debt. We're closing in on $27 trillion. That's about $214,000 per American taxpayer. How concerning is this on a macroeconomic level?
Well, it's very concerning for me because we're a big no debt people. But what happened, just some examples for you. In 1989, 1990, Japan started into that same number, and they've never really grown since that time. Or I can use Italy 12 years ago or so. They went above 100% of GDP, and they're not growing. And that will be our problem. In order to get that number down, it took from World War II to almost just before Reagan, or right maybe the early 80s, to get it back to around 30% of GDP. And the way that happens is effectively, you have a little more inflation. They have a rate of return on interest rates.
And I do want to talk about politics a bit because this is all happening amid the backdrop of a presidential election. How do you think that the markets would react to a Joe Biden presidency? President Trump says that they'll tank. No surprise there. But what do you think?
Well, I've always found it's hard to determine. I've been through a number of elections, and they always say, if this happens, if X happens, then Y happens. And really, it's never exactly that way. And so while I think there would be there was some changes for sure, particularly if he came through with his agenda. But to know what the outcome really is very, very hard to say right now.
I want to talk about some specific stocks as well. Facebook made a big announcement this morning saying that it's not going to allow any new political ads a week out from the election. Facebook shares are actually down on the news. Wondering what your reaction is to that, as these social media companies are really going to have to make changes around misinformation. But what about Facebook's growth prospects in terms of being so heavily ad dependent?
Well, one of the things I noticed, Jill, is that and I noticed this on all of social media. If you look at Instagram, Facebook, and all the others, it's gotten to where there's so many advertisements that you can't get down to the real information you're looking for on that particular media piece. I think that's what's going to choke down a lot of these companies in the long run. They'll have to get to a point where they're going to have to find a happy medium on this. Why they did it a month ahead of time, I don't know, because you have another, 5 weeks or so of people spewing out everything they want to say politically. So I don't know, it makes a lot of difference. I'm not certain why they did it, but maybe just because they thought they'd be too covered up with it. But I think that's becoming a problem for all social media right now.
Let's talk about IPOs and the IPO market, which has really picked up since the start of the pandemic. The IPO ETF up more than 60% year to date. What are you expecting in the last part of this year when it comes to IPOs, potentially Airbnb going public and some other big names as well?
Well, if you look at the numbers, Jill, on that are coming out, okay, they're huge, and they're not just, every one of them is in the billions when they're coming. The problem with all of that, and I've been through a lot of highs in the market, is these things come when markets are topping. They don't come at a low in a market. And so Wall Street has a way, they'll push out everything they can possibly push out while people will buy it. And what I see on a lot of these IPOs, they're buying things that really don't make a lot of money. Or if you look at the number, we have the largest number of SPACs, these special purpose acquisition corps also, which are basically just another IPO with nothing in it. And all of those things are indicative of a market high. And I think people need to really be aware that Wall Street's trying to sell you something that may or may not have any real value to it.
On that note, I mean, do you think that the markets in general are just overvalued right now, especially given where things are with the economy? And I know there's a difference between the stock market and the overall economy, but is there at any point when just record unemployment and what we're seeing in terms of an economic downturn and businesses going under, when that catches up to the stock market?
There will be, Jill. I think what will happen is you'll have something along the lines of you finally run out of Fed money. That's one of the first thing that happens. And people have to come to the realization that, hey, I have to have a job. I've got to make money, but there's not a job. All that gets into the marketplace. And you have this incredible number of small investors now that have never done this before that thinks it's something like a video game. Well, that all goes away. I've seen this happen before. It will be unfortunate, but there'll be a lot of money lost from this level of market with these people.
All right. Really great insight. Ted Oakley, managing partner and founder of Oxbow Advisors. So great to have you on this morning. Really appreciate it.